Okay, so that's an optimistic view coming in. Mr. Roongta, I was, actually just thinking that you drive down Western Express Highway, at least that's the part of the city sort of I frequently drive around in. Every second billboard will urge you to buy a home. It's either a hoarding of a real estate developer or the hoarding of a bank or an NBFC promising you home loans at 6.5%. So your thoughts at at this whole phenomena that we're witnessing and whether this is really the start of a new property cycle?
I think whether it's the start of a new property cycle or not, that's tough to predict. But I think it's very welcome. I think real estate is a driver of lots of industry employment for our unskilled and semi-skilled people. So I think it's very, very welcome. And if it is the start of a long cycle, then it's even more welcome. And I think, like Ghulam mentioned, there is probably a pent-up demand with the rates being low. Uh, I think, of course, we forget that these are all floating rate loans, and over 15, 20 years, these rates are going to go up or down. So the impact of the low rate is at the lower end of the cycle. And I'm talking of even lower than 45 lakhs, say the 10 lakh, 20 lakh houses in, semi-urban and tier 3 cities and even rural India. There it makes the difference between being eligible to take a loan to buy a house or not, because the interest rates have come down from 15% to 10 or 11%. For the part of the segment that you mentioned, 45 to 2 crores, it means that you are now eligible to buy maybe a slightly bigger house than what earlier you would have thought about. So I think definitely the low interest rate has a very big impact, both in terms of people being eligible to buy itself, that is at the lower end, and at the urban sites, I think it helps people to sort of buy a little more space than they would have otherwise bought.
I'm going to actually come back to you, Mr. Roongta, on a lot of the specifics about the math and how to sort of get the calculations right if you're willing to go ahead and take that plunge. But before that, Ghulam, tell us a little more about some of the key markets. I mean, let's talk about the four metros and some of the other major tier 2 markets like maybe Pune, Hyderabad. We know that sales transactions are happening, but what about pricing? Would it be right to believe that eventually prices are going to start rising? So if you really want to buy that house for yourself to live in, should you just go ahead and do it now?
First of all, transaction levels. Let's talk about transaction levels in all these top 7-8 cities. And as we spoke about, I think you are referring to our last report also, in that it was showing a signal or giving an indication that the markets are falling back in place, because the report actually was up to June. But last 2-3 months on ground, positivity has been telling an entirely different story, as I said earlier. However, that is yet too early to have any impact on price point. To tell you a bit more in detail about that, as we speak, in last 4-5 months, we have a lot of new launches happening. We always talk about inventory pressure in the industry, where how many apartments are out there to be sold and what kind of velocity of sales are we expecting. If it is under control, then there is a reason for a developer to really think of price rise. If not, if inventories are a lot and the velocity of sale is not very healthy, then they will never even think about changing the rates, etc. So one thing is for sure, in last 5, 6 years, 7 years of a continuous ongoing recession in residential real estate in the country, the possibility of further reducing the price is as good as dried up. So even during the pandemic peak constraints of the times and labor shortage, etc., when developers were most desperate to sell, even then the price corrections were not happening. Today, when we are looking at an upswing, when you're looking at an uptick in pretty much every market without exception. In fact, as we speak, I was looking at a few numbers which is just about coming in from Bengaluru. Bengaluru market is at last showing a big gain. In last month or so, the number of apartment transactions that have happened in that market are looking great. So first it was Mumbai, then Pune, and then spreading into Bengaluru, and now even West Bengal, Kolkata, with stamp duty cut declared over there as well. We have seen last month or two, we've seen unprecedented kind of sales happening even in Kolkata. So we are talking about pretty much every market showing good transactions, but for those transaction numbers to give a comfort for the developers to start increasing the price is not yet happening. Going forward also, short to mid term, we are not expecting any price rise to happen. While as we speak, few developers, big brands and really exclusive products, etc., have started experimenting with here and there some price rises and even succeeding in getting slightly higher price. But otherwise, if you're looking at macro perspective, prices are remaining stable for some time to come, at least a couple of quarters, I would say.
Well, those who want to buy their dream house, they would definitely want to believe you and sort of pray that it stays that way, at least for a while, because stability has come back to the market after a long time. So now, Mr. Roongta, back to the central question. If you decide that this is for your own self-consumption and your family, and you do want to invest in that home, where do you begin? Budgeting is most important, knowing how much you can afford without disrupting your entire financial plan. So what's the starting point?
I think the starting point is, should you buy a house or not? And I think typically you mentioned about the right time, etc., to buy a house. I've always maintained that the right time to buy a house is when you have enough money available for the down payment, and that the loan amount that you need to buy the house that will serve your purpose, that EMI on that loan should not be more than about 35, more than 1/3, or maybe at most 40% of your monthly income. I think that's very key to make sure that you buy right. So I think 2-3 things are needed. You need to have a commitment to the city, so you need to be reasonably sure that that's the place you're going to stay. You have social networks there, your children, educational networks are there, parents networks might be there. Whatever is the reason that you decide to stay in a city, that has to be there. You have the money for the down payment, and the loan EMI should not exceed more than 35, max 40% of your monthly income for a house that you would want to stay in. So because that will also depend on the type of house that you buy. So I think the budgeting should be what kind of a house I can buy rather than the reverse.
No,
You know
absolutely.
what you can afford, and you should use that to buy the house that you
No,
would like to
absolutely.
stay
I think that really helps us to draw that, little Lakshman Rekha, which is 40%. The EMI should be no more than 40% of your monthly income. That helps us to sort of, keep the overall budget in mind, especially at a time when interest rates have fallen so drastically. We'll take a break. The conversation will continue. We'll then, of course, also get into the nitty-gritties of how to structure the loan right. What should you ask the banker when you're sitting across the table to sort of negotiate that loan? All of that and more after the break.